Hello, YouTube. Big tech continues to beat and guide higher. That is the theme for Tesla and for Netflix. And we note that the market is making a brand new high. So, why is that important? Well, it's important because we actually ticked up to 84. So, today we're going to look at the move in after hours with Netflix down by about 3% right now and Tesla basically treading water or flat. There are less things for us to worry about. Netflix subs jump 8%. Revenue climbs as password sharings crack down, take hold. And here we can note that Tesla books 24.9 billion in revenue with margin declining after price cuts. So what do we have? Revenue coming in with a beat and earnings coming in with a beat. Tesla beat. There you go. Margins are declining a little bit, which is why it was a little bit mixed in after hours. We look here to Netflix reporting 329 on EPS. That is going to beat the 286. I'm not sure why it says that does not compare. Again, we're recording this briefly after the market close, so everything might not be fully accurate. Revenue did miss slightly, 8.2 versus 8.3. So if we're looking here at after hours, they're like, well, it looks like they beat, but they're not going up. And that is exactly the reason why we're going to be looking at the move tomorrow. We want to know if fear and greed is going to continue to squeeze. And that's important because as we look to not just post-market, but so far year to date, pretty hard to argue that these stocks have not done well. Netflix here is at 60% year to date, and Tesla's at 145. So these companies have absolutely crushed. We heard more news from Apple as well. Apple tests Apple GPT, develops generative AI tools to catch open AI. Interesting. And then from Meta yesterday, oh my goodness, at noon, they tell us that we believe an open approach is the right one for the development of today's AI models. Today, we're releasing Llama 2, the next generation of Meta's open source large language model, available for free in research and for commercial use. Interesting. As we're going into big tech earnings right now, after the close with Netflix and Tesla and note to next week, we want to look at the broader market to know whether or not there is strength or weakness. And I have a big clue. So just before I show you that clue, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So I'm looking for a simple pattern here. I've talked about this before. We're talking about the fear and greed. Prices clearly made higher highs. The fear and greed made it to 84 today. It's not going to hold that on a close, but our previous top here is at 84. So we went to, there you go. They're showing it for yesterday at 84. So that's interesting because now we're actually seeing the higher highs in the price, but also higher highs in terms of the fear and greed. And this is important because if we look back here to the timeline, when did we establish that last high? Well, I believe it was around late June. Come on, baby. There we go. Late June. We got June 30th. So where were we on SPY on June 30th? Well, we're not where we are right now. So there you go. It's right here on the gap. So on the gap, that's where we had the fear and greed at 84, and now we're about 10 points higher. So what I'm looking for is a very clear pattern that is happening over and over ever since we tested our 50 DMA on a back test. So we go over, there we go. There's the pop, there's the flag, 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 there's the pop, there's the flag. So what are we looking for? Well, you probably guessed it. We're looking for a pop, which we already got, and then we're looking for a flag. Where do we want to flag out? Over our previous flag. Why? Because it signifies we're in expansionary territory. We look here. Here we have a double top, but we have ascending triangle, which means we have higher lows. So what does that mean? We're playing excellent defense by defending a higher area than before, but we're failing to make fresh offense or actually getting into higher highs, meaning 52-week highs, not all-time highs. So that's all we're watching for here. We clearly established a low on the gap, and we left the gap here. So is this going to be the higher low? Then we form another higher low? Or are we going to form some kind of pattern like this where we form some kind of relative high around 455? We come down and form some kind of W before we go higher, because that's what we formed here. So the fear and greed is there. Our cup and handle with a pass, the pattern is there. We want to be very mindful of it. And the last thing I'll note regarding what we're looking for is going to be the weekly chart here. And we're looking to the note that we shared a while ago now. Hollow candles signal the expansion is continuing. Lower lows are a warning. Well, we got another hollow candle. We're over last week's high, and we got a higher low and higher high. So there's no warning. And so far, we have the expansion continuing. This seems bullish. It seems like if we would have known that, That would have been excellent feedback. And as of right now, there is not very much that I can latch onto to say that it's not bullish. So if we note the fear and greed, which we just talked about, and we note that so far we've had, this is 11% of the S&P 500 that reports earnings this week. It's a pretty good chunk of it. So when we look to the heat map for today, let's look at the heat map for today, and then we'll look at the one for, let's just look for today. So banks are doing pretty good, right? We got Bank of America up. That reported earnings yesterday. But if we look at the last 1 week, remembering we had earnings, hey, it doesn't look so bad, right? If we were worried about earnings from Tesla, from Netflix, from big tech, from energy, from everything, well, it wouldn't look like this. I know that. So broadly green, and the Magnificent Seven continue to carry us up, which we said could take us to new all-time highs. So if that's the case, what else can drive that fear and greed? I think I mentioned it before, but remember, if we're at 82 for extreme greed for the bulls, it means we're at 82 extreme fear for the bears. These bears are scared, but they're not quite all out yet. So if we look to earnings so far, well, we don't have to look at individual companies. Most of them have been part of the beat crew, which we laid out on the weekend review. But when I look here, the net effect for these major ETFs, that's what I care about. S&P at higher highs. That's the first thing I know. Let's look at QQQ. Higher highs. So the turning point was bullish. Okay, cool. At least we know it. Then we look down here to the dollar. Dollar is treading water. Fine. That's okay. Now we want to look at two more things. The things I want to look at here are going to be, let me go here to my watch list. I want to look over here to, so let's look at the percent gain on the day. Right now we got QQQ flat and we got S&P up by 0.2%. So that's important because when we now look down to these other ETFs, we note that RSP is up by 0.5%. It's up twice as much as the S&P. Why? Well, because we're noticing other sectors are finally participating. Like what? Like here, we got ARK. We got the New York Stock Exchange up by twice as much as SPY. Energy up by twice as much as SPY. Healthcare up by twice as much as SPY. Utilities up by 4 times at 1%. Financials twice as much as SPY. So it's really like everything else rallying other than big tech. IAT rallying pretty nicely too. These are regional banks, and they're up by nearly 8% on the week. So when we talk about breadth and depth, well, that's like literally what this means. If tech is flat or down 9 cents, and after hours it's down by 70 more. S&P is down marginally in after hours or 24 cents, but it made a higher high, and it's up by 0.2. But other ETFs are up by more. That's exactly what we want to see. We want to see pickup from the rest of the market. We want to see the rest of the market catch up to these leaders. Leaders lead, followers follow. So if we look at year to date, do you know which blocks have been leading? If you're not sure, I'll give you the hint. It's the big ones. It's the Magnificent Seven: Microsoft, Apple, Google, Amazon, NVIDIA, Tesla, Meta, Berkshire. For riding the AI wave, was there fresh AI? Yes, sir. Fear and greed pushed higher. Apple's talking about Apple GPT. Microsoft has that investment in the $30 they want per month. Google released Bard. Amazon talked about their version of AI. NVIDIA is leading the AI charge. Tesla has, they got their charging network. No AI mentioned, but they're already doing that robo-taxi and all that stuff. Meta, I just showed you. That's it. Those are the Magnificent Seven. They're all talking about it. So if the rest of the market can now look more like this group, which means green, right? We noted healthcare was up today. We need to see that. Utility, same thing. Health services, same thing. Financial, same thing. That's how we see the market tread water to grind up as the rest of the market catches up. That's the catch-up trade. And the last thing I'll point out here is that we've also looked at this, the CFTC net short positioning for quite some time. Let's just look at a template going back to before, which is very clear. So we have the big short, we have some capitulation, they double down, and then they go to net long. All right, let's look to 2020. Big short, they capitulate, they double down, but not to the same extent. Again, low, higher low, low, higher low, but then they go to net long. Same thing happened here. Big short, they cover it, they double down and go to a lower low, and now they're right back here. So what I want to focus on is going to be the period going back to 2016 because it's an extended period. We got March of 2015 all the way to April of 2016, or roughly 13 months. When did this big short start? Oh my goodness. It's right around June 24th to basically July 1st. So if we extrapolate that out 14 months, well, that's like right now. So time-wise, it matches. We got the big short, we got the cover, we got the double down, we got the reduction, but they haven't gone to net positive yet. So they fought it here for a few weeks. Let's look at that a little bit closely, right? So they reduce, go to net long. What happened here? These bears will not give up. There's a third bar here. I'm not sure why it's not showing, but stair step, flat line at 200,000 contracts. So what I want to focus on here, and just bear with me for a few minutes, I promise you'll get some value. So on June 2nd, which is before we formed that peak on the fear and greed, here we have 34,000 contracts. So we know that earnings are going to come up, right? We already talked about that. I want to focus on the squeeze potential because that's really what we're doing. We're noticing catch up from other sectors, but we want to know if there's more juice in the tank. Fear and greed is a really good cheat code or indicator. But what I want to know instead is where was the chart on these dates? So what I'm going to do is remove all the lines. We're going to make this chart nice and easy. And if you're still enjoying and have not yet done it, I would appreciate if you could smash a thumbs up and subscribe to the channel. Thank you ahead of time. All right, where do we get June 2nd? So this will be the week ending June 2nd, by the way. So we're looking at June 2nd. Let's just find that date roughly. All right, June 2nd. Here we go. So on the last gap, okay, well, here's where they started reducing. They reduced into this leg up here. But let's focus on this. So we focus on the part right here to now. That's a lot higher. How much higher? We're up by about an extra 8%. But here's the really interesting part. So if we look at those dates, we're up by 8%. Well, what's 8% more from where we are now? Okay, well, let's figure it out. It's not rocket science. All right, from right here, 8%. Oh, crap. That's like all-time highs. It is. It's 490 something. Here's the second part I want you to focus on. So if we look at the date again, it's June 2nd to today, which is going to be roughly July. It's July 19. Oh, man. It's like on the week here when we were at this area, and there's a dotted line. It corresponds with the 61% retracement on the Fibonacci level. Where did we go? Well, we went from 61 to 78 pretty fast. So we went from the 61% retracement at 430. We rallied by 20 points to make it to the 78% retracement. All this means is that we're doing math. And if this math confuses you, just look at this. It's so easy to look at when we think about easy stories. From negative 400 to negative 200, we went from the 61% retracement to the 78% retracement. If now there's the same amount left, 200,000 contracts, and they've not yet flipped long like every previous time. They've always flipped long after they get the big short on. Well, what could that do? Well, that could be enough fuel for us to go from this dotted line or the 78% retracement to a 100% retracement, which means what? Retesting those highs. So as we notice more stocks joining the breakout crew, like Apple, breakout crew, new all-time highs. Microsoft, breakout crew, new all-time highs. NVIDIA, breakout crew, new all-time highs. You look at XLK, breakout crew, new all-time highs. You look at the DAX, breakout crew, new all-time highs, but not quite holding it. Is S&P next? Is the S&P going to march up to all-time highs? Wow, would that be something? So with that said, thank you so much for tuning in. The weekend review is now queued up here on the left-hand side, which gives you my deeper thoughts on how I thought we could be bullish this week. Thank you so much for tuning in. I look forward to seeing you tomorrow.